are big changes in store for some big-name stocks that trade on the big board. The SEC moves to open up market competition and lower costs to investors. Good evening, I'm Paul Kangas.
And I'm Susie Garrett, and we're both in Miami tonight. As for the markets, the NASDAQ breaks a big winning streak, closing off a fraction. The Dow loses 38. Then they're all the rage on the road these days, but should drivers of big sport utility vehicles pay higher insurance rates?
Nightly Business Report is brought to you by Compaq, makers of compact non-stop e-business solutions for companies who know that the online world never stops, so their information systems can't stop either. Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series, investment products distributed by investment professionals. The financial consultants of A.G. Edwards, committed to making investors comfortable with their investments, with their futures. A.G. Edwards, be comfortable. And is produced in association with Bridge, the global financial information company, providing real-time and historical market data, analysis, and news.
Good evening, everyone. The sellers were out on Wall Street today. Even the NASDAQ slipped into the red, but it still made history. Trading volume reached a record 1.6 billion shares. The Dow lost 38 points. Meanwhile, in Washington, government regulators are working on issuing new rules that will make trading in some of the biggest names in corporate America more competitive. Darren Gersh explains.
IBM, General Electric, AT&T. The Securities and Exchange Commission says it's time to open trading in these and all other companies listed on the New York Stock Exchange to more competition. To make sure that happens, the SEC today approved new rules allowing NASDAQ market makers to link with other stock markets and get in on the action.
Our market simply cannot afford to have progress toward faster, better linkages impeded.
Under new rules taking effect early next year, qualified market makers will have full access to the intermarket trading system. That system, called ITS, links the New York Stock Exchange with other regional markets. NASDAQ market makers had been barred from using ITS to trade stocks listed before 1979. But today's SEC action follows a vote last week by the New York Stock Exchange to remove those barriers. Soon, the SEC says it will go even further, opening up the ITS system to computerized order processing systems called ECNs.
When we have that, we will have finally competition in our markets, and investors will reap the benefits of better service, better access, and lower prices.
The SEC also sought out middle ground today on the issue of how much investors should pay the nation's exchanges for access to real-time stock quotes. The SEC suggests the fees investors pay should include some reasonable reimbursement for regulation and other exchange expenses.
In this day and age where we've had really a democratization of the markets, retail investors are in the marketplace very actively, right alongside professional investors. We want to be sure that there's a level playing field and that they have access to the same information in a fair and reasonable manner.
The SEC is in the early stages of its study of stock quote prices, but it says the effort is already having an impact. Since they began their work, SEC officials say fees charged retail investors have been reduced by as much as 80%. Darren Gersh, Nightly Business Report, Washington.
Wall Street's blue chip stocks opened on a firm note today as bargain hunters moved in cautiously after yesterday's 118-point downturn in the Dow Industrial Average and lifted the index to a 57.5-point gain by 11 a.m. as bullish confidence was bolstered by continuing strength in the high-tech sector, resulting in a 35-point gain in the NASDAQ index by 11:30 a.m. The upturn in stocks was undermined over the mid-session hours by some weakness in bond prices and the beginning of year-end portfolio shuffling by some of the big institutional investors. At 1:30 this afternoon, the industrial average fell to a 24.5-point loss, while the NASDAQ index was off almost 4 points. The market churned about in a relatively narrow range, but in very active trading for the rest of the session. The Dow Industrial Average finally closed with a loss of 38.53 points at 11,068.12. In today's 104-point trading range, the industrial average settled right at its low of the day. The NASDAQ Composite lost only 0.84, ending at 3586.08. No record here for the first time in 5 sessions. In the Composite's 46-point range, it settled at 6.5 points above its worst level of the day. Big board volume, 948.8 million shares, down from yesterday's billion-dollar level, and about a 5-to-4 ratio of down volume over up volume. The Dow Transport Index down nearly 4.5 points. Utilities fell 2.21. The closing tick slightly bearish at minus 375. Standard & Poor's 500 off a little over 5.25, nearly a 2-point drop on the 100. Mid-cap 400 off 4.19, and the Bridge Futures Price Index fell almost a point. New York Stock Exchange Composite off 0.77, a loss of 1 2/3 in the value line. Russell 2000 Small Cap Index rose 3.14, interesting, and the Wilshire 5000 down about 19 1/3 points. It was a quiet day of trading in the bond market, but it moved generally lower as some money managers sold treasuries to buy new corporate debt offered by Procter & Gamble, Kmart, and Cooper Tire and Rubber. The Federal Reserve's Beige Book survey on the economy for October and November showed moderate to strong growth, but with few signs of accelerating inflation. Caution ahead of Friday's Producer Price Index report was the main cause of 1/8 to quarter-point closing losses and similar losses in treasuries. Let's see, we see a 5/32 drop in the 5-year notes, 10-year notes down 8/32, and the 30-year bond down 11/32, bringing that yield back up to 6.23%. And finally, the Lehman Brothers long-term Treasury bond index fell a little over 3.5 points. I'll be back shortly to show you where the action was on Wall Street today. Susie?
Paul, here's a question for you. What do Disney, DLJ, and Georgia Pacific have in common with AT&T?
You got me.
You give up, huh? Well, what they do have in common is that they all have tracking stocks. A growing number of big-name American companies are joining the Tracking Stock Club. But as Suzanne Pratt reports, there are a few things investors should know before they buy in.
When AT&T unveiled plans Monday for a tracking stock, it was heading down a familiar path. After all, the telecom giant already has a nominal ownership in Liberty Media, a tracking stock created earlier this year. Individual investors, however, may be less acquainted with these somewhat quirky equities. In simple terms, a tracking stock is a special class of a company's common stock, set up to track a particular business unit. For the most part, they're designed to separate out high-growth divisions and enhance shareholder value.
Typically, what you see is a company that has 2 or 3 businesses that are growing very differently in very different markets, and they are not valued well in the public markets as a consolidated currency.
Tracking stocks can also be used as currency for new acquisitions or as compensation for key employees. But experts warn of the potential for problems down the road, as there is no legal separation of assets or liabilities. New York law professor Jeffrey Haas says shareholders also need to realize that tracking stocks share the same board as their parent, and that can create conflicts of interest.
I like to say it's one servant trying to serve 2 or more masters, and that's, of course, a dilemma, almost impossible to make everyone happy in that context.
As for investors contemplating a tracking stock, history shows they can be a mixed bag. Some have been big winners, while others have been big losers. Experts advise making the investment decision on a case-by-case basis.
Well, they have to look at the fundamental story. Is it a story that they're comfortable with? Is the parent company a company from a credit perspective that they're comfortable with? Do they believe that by creating the tracking stock, it will enable the company to enhance overall value and create a currency that grows over time?
As long as the stock market remains at lofty levels, experts say look for more tracking stocks in the coming months. They say this market is rewarding momentum and growth, and large companies will be looking for any way to capitalize on that trend. Suzanne Pratt, Nightly Business Report, New York.
Just a bit of a hint of consolidation on Wall Street today, even for the NASDAQ market. Probably a healthy development. In any case, the Dow off 38.5 points, and the broader market lower by a 19-to-11 ratio. Only 97 new yearly highs, 420 new lows. Compaq Computer topped the active list on 12.2 million shares, losing 5/8. America Online gained a point. The company's in a 3-year agreement with Telescan to develop financial software. Tyco International, after recent losses, making a little comeback, up 1 3/16. Kmart edged an 1/8 higher. Bank of America and a weak financial sector off 1 13/16. Disney dropped 9/16. Kroger was off 3/16. Ascendant moving up 13/16. Pfizer and a relatively weak drug group down 1/8. And Circuit City Stores dropping 5 13/16. That stock was off 3 1/4 on Monday because of its disappointing November same-store sales, which were up only 6%. Citigroup down 2 3/8. The company and State Street Corp are going to form a new firm which will provide pension plan and other financial services both here and abroad. And guess what it's going to be called? City Street. What else? DuPont down 1 9/16. The Delaware court wants to the company to grapple with allegations, the old allegations by farmers that the company withheld information about its fungicide Benlate. The New York Times stock up 4 7/8. The company is comfortable with 99 earnings estimates on the street of $1.72 a share. Royal Caribbean tumbling 5 1/4 points after Buckingham Research cut 2,000-year estimates from $1.60 to $1.50, downgraded the stock from buy to market perform. Texas Instruments moved up 5 13/16 after the Gruntle brokerage increased its price target from $100 to $135 a share. And Tribune Company's stock did well, up 4 3/4. This firm is very upbeat on the earnings outlook for its fourth quarter and the year 2000, and it's considering taking its online media business public sometime. Pillowtex, very nice gain of 1 7/16. Wachovia Securities issued a buy recommendation. That was an upgrade from a neutral rating. Korn Ferry International, which is involved in executive recruiting services, a real turnaround here is second quarter earnings of 17 cents versus a loss of a penny last year. Revenues up a handsome 28%. Warburg Dillon Reed Brokerage came out with a buy recommendation. Safeguard Scientifics up 21 5/8, reflecting the sharp recent gains in this company's high-tech holdings. It has a huge portfolio of some of the hottest high-tech stocks. It's a real incubator. Land's End, the big loser of the day, the retailer of casual clothing, dropped 13 7/8. It reported an 18% drop in early fourth quarter sales. Disappointing. TransCanada Pipelines down 1 11/16. This company is going to take a $700 million fourth quarter charge related to sale of non-core assets. It's also going to cut its annual dividend 29% down to 80 cents a share. That's Canadian. And Walter Industries, which is in home construction services and financing, down 1 1/2. Company sees lower than expected second quarter earnings at 20 to 23 cents. The street was looking for 26 cents. NASDAQ down 0.84. The volume of 1.671 billion shares was a record for one day. Up even from yesterday's furious pace. 18 stocks higher for every 21 lower. Yahoo topped the active list. A little profit taking after sharp recent gains. Of course, yesterday after the close, it became a member of the Standard & Poor's 500 index. Sun Microsystems up 6 13/32. The company's in a joint venture with Inktomi and Digital Island to improve website performance for consumers. Cisco Systems down 1 9/16. Little profit taking in Intel off 2 11/16. Microsoft lost 1 1/4. Microsoft and LM Ericsson are in a strategic partnership to develop mobile email wireless technology. Qualcomm down 9 5/8. CMGI, this is another high-tech incubator company, up 11. Exodus Communications up just over 21. Amazon.com rose 2 1/2. 10th in dollar volume. MCI WorldCom down 1 3/16. Three new issues, really hot ones. Of course, this is the Pokemon products for grown-ups. Preview Systems went public today at a price of 21, 3.8 million shares offered, opened at 63, the high of the day 94. And over .net had a good day, provider of Linux-based systems and software, 4 million shares offered at 18, opened at 49, high 69, let's make it 66 3/4. And Agency.com, this is an internet consulting firm, went public, 5.9 million shares offered at 26, opened at 92 1/2, and the high of the day was 98. The American Exchange Index down 0.80. Rampart Capital Corp up 2 9/16. Spokesman said third quarter earnings are probably just reaching shareholders now. They were 44 cents, way up from 6 cents last year. Delayed reaction, apparently. And Stillwater Mining up 2 5/8. Merrill Lynch increased 99 earnings estimates from 85 to 92 cents a share. And finally, the index shares all on the downside, especially the NASDAQ 100s for a change. And that's the Wall Street wrap-up. Susie?
Pokemon for adults. That's a switch.
Absolutely.
Paul, Charles Schwab's customers began entering trading orders from their PCs back in 1984, and that was long before the internet was a household word. When trading moved to the web in 1986, Schwab separated internet customers from those who used its branch office and telephone systems, but it quickly found that was a mistake. Schwab's enterprise president, Gideon Sasson, told Scott Gervey why this lesson is one others should study at a recent Business Week conference on the digital economy.
We had two very successful businesses, but to very unhappy customers. You know, the Schwab customer said, well, why can't I get the $29.95? And the $29.95 customer said, why can't I talk to your people and walk to your branch? So not a good place to be. And that's when we realized that the key to success is actually wave the internet into your business model. Make it one. That was, you know, when we did that, it cost us somewhere between $125 to $150 million to the bottom line. You know, the stock price took a hit from 41 to 28, but that's an old story. It took a few quarters, and that's when we realized that the key to success is actually bringing the two together.
It sounds like that's an interesting lesson for other companies to learn, really, to use your words, weaving the internet into your business plan.
Right. It's actually, I think, one of the biggest mistakes that some companies are making is the fact that they look at it as a separate business. Customers don't make choice between e-business and T-business, you know, traditional business. They don't. They make a choice based, you know, what they want, when they want it. My biggest prediction about the internet is that the internet will force every company to become first customer focused, then figure out how to become profitable. Because customers are not only that they're a mouse click away from into your competitors. I think the risk is that they're a mouse click away from your own customers. So customers' experiences are, you're completely exposed, completely exposed. And what you ought to do is figure out, how do I make that customer happy?
Does it just get too expensive to maintain the internet side of the business separately?
Sure, because how do you take advantage? I mean, yes, it's exciting to think about, you know, I'm going to start an e-commerce company and I'm lose money and I'm going to have a huge market cap. But at the end of the day, you have to generate cash flow to get shareholder return. That's going to come. And when that happens, then it's going to be the basic of your cost basis. So you have to take advantage of that channel in your traditional business. And in addition to that, use that as an advantage to compete with the e-business players only, because you have an asset that they don't.
What do you tell people who attend this conference who are not already committed to the internet?
Understand that you have to be customer focused, not product focused, not earning focused. Yes, bring that secondary, but start with the customers. The customers need to be, he/she must be in the center of your thinking. The second thing is integrate the two. Don't leave them apart. Make sure that you're thinking about it as you need to capitalize your own business model. You have to understand the channel and bring it in.
Thank you. Gideon Sasson of Charles Schwab.
Tomorrow, a different approach to the digital economy, creating a different web presence for your bricks and mortar company.
As more and more Americans are driving bigger and bigger sport utility vehicles, the insurance industry is debating a critical question. Should owners of SUVs pay more insurance than car owners? As Diane Esterbrook reports, the key issue is that SUVs can cause big damage when they collide with cars.
The Insurance Institute for Highway Safety says people riding in cars are more likely to die when their vehicle crashes with an SUV than with another car. Insurance industry experts are concerned that as SUV models get bigger and heavier, the risk to car occupants could become even greater.
We get a mismatch. That aggravates the problem when you have a collision between an SUV and a car. You have a weight difference, you have a geometric mismatch, and also SUVs are stiffer.
For the past 2 years, the Insurance Services Office, which provides rate guidelines for insurers, has been investigating accidents. It wants to know if SUVs are a greater liability risk and should carry higher insurance premiums. Currently, most insurers base the liability component of auto insurance on the driver of a vehicle, not the vehicle itself.
Our analysis actually is a departure from that approach, which has been in place for several decades. And that is to see whether we can predict liability losses, that is, the losses that a driver inflicts on another driver based on the make and model of the vehicle they drive.
But industry experts point out that while the number of SUVs in the U.S. has tripled over the last decade, they still account for far fewer accidents than cars do. That is one reason insurance giant State Farm is not considering higher premiums on SUVs, at least not yet.
If we found that collisions involving SUVs are causing significantly different amount of damages to other vehicles than just a normal passenger automobile is, that could potentially be something to be evaluated from a premium adjustment standpoint.
Higher insurance premiums could ultimately impact SUV sales, something that hasn't been lost on the auto industry. That's one reason automakers like Ford are now looking for ways to design SUVs that cause less damage when they collide with other vehicles. Diane Estabrook, Nightly Business Report, Chicago.
Recapping today's market action, the Dow fell 38.5 points while the NASDAQ index lost a fraction. And please join us at our worldwide website, NBR.com, or on America Online, keyword NBR.
And that's Nightly Business Report for this Wednesday, December 8th. And we want to remind you that this is the time of year your public television station seeks viewer support.
Support that makes programs like Nightly Business Report possible.
Thanks for joining us this evening. I'm Susie Garib. Have a great evening. And the same to you, Paul.
Same to you, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Bridge, the global financial information company providing real-time and historical market data, analysis, and news. And is made possible by the financial consultants of A.G. Edwards, committed to making investors comfortable with their investments, with their futures. A.G. Edwards, be comfortable. Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series, investment products distributed by investment professionals. Compaq, makers of compact non-stop e-business solutions for companies who know that the online world never stops, so their information systems can't stop either. And by the financial support of viewers like you. Wall Street can be a confusing place, so if you're new to stocks or bonds, be sure to see the updated version of NBR's classic home video, How Wall Street Works. To order by credit card, call 1-800-535-5864.
Funding for local broadcast of the Nightly Business Report has been provided by viewers like you and by the following. The Collins Foundation. The Collins Foundation is dedicated to improving the quality of life in Oregon.
Wells Fargo, proud to support our communities with quality family programming.
The companies of CNF Transportation, Emery Worldwide, Conway Transportation Services, and Menlo Logistics. CNF Transportation, where ideas carry weight.
Hi, I'm Kate Peterson from Oregon Public Broadcasting. Would you like to learn how to get a classic black umbrella? How about a great-looking OPB denim shirt? Maybe you're in the mood for a new travel mug or in need of a distinctive gift for a colleague or family member. Stay with us for this brief break and we'll let you know how to get your hands on all those things and more. We're here to offer you an opportunity to join the over 100,000 members of OPB. And to thank you, we're offering those great gifts. Joining is easy. Just call 1-800-551-9911.
Hi, I'm Bill Doobie with OPB. Members are responsible for over half our budget, and they have a big part in deciding what they see here at OPB. All it takes to become a member is a call to the number on your screen and a contribution of $35 or more.
That's right, and we'd like to get you started off in the right way. Pledge $60 and we'll send you the OPB Premier Pack. The Premier Pack includes a year's subscription to Oregon Focus magazine, OPB's programming guide for both radio and TV, and the Member Club card. This handy card is good for discounts and free admissions all over the OPB viewing area. Finally, we add a comfortable navy blue embroidered OPB t-shirt. It's our way of welcoming you to OPB.
OPB memberships make great gifts for friends or business associates. Giving the gift of OPB membership is just as easy as becoming a member yourself. Just call and ask for details. The number is 1-800-551-9911. While you're on the line, sign yourself up as well. If you're already a member of OPB, this might be a good time to check and make sure you're not due for renewal.
OPB's members are OPB's true strength. Over half of our budget comes from member support. Our members are so important. Please do what you can to keep OPB a strong and vital part of life in our special corner of the country. For over 70 years, we've been a voice of reason, and we hope to continue to do so well into the new millennium. But we can't do it without your help.
Consider this. Every dollar you contribute goes to purchasing new programs, producing award-winning local programs like Oregon Field Guide or Oregon's Memorable Century, and to OPB's ongoing quest to be ready for the new millennium. With the advent of digital broadcasting, OPB intends to continue to be a leader in the world of public television. But the federally mandated conversion to a digital signal will require us to replace almost every piece of equipment in our signal chain. We're up for the challenge, but we'll need our members to help. You can help tonight by calling with a generous pledge.
And when you choose to give $75 to aid us in this effort, we'll thank you with your choice, either this OPB stainless steel travel mug or this auto-opening OPB umbrella. If you are already knee-deep in both of these choices, consider a dark blue denim shirt, stunningly embroidered with a brilliant Mount Hood sunrise. It's our gift to you when you pledge $175. All you have to do is call 1-800-551-9911.
Please call right now and give generously so that all your friends and neighbors will continue to have access to first-rate, commercial-free television 24 hours a day. Thanks so much for your support. Now,